Markets
What's up, everybody? Richard here, and welcome to Forex Fire, just past 3 a.m. Central. Joining me again today, coaches Tiger and Michael. How's it going, lads?
Wonderful.
TGIF.
Happy Friday. Yes.
Happy Friday, yeah.
Made it another
I
week.
suppose a new month as well, right? Happy August. Can't believe
It's
it.
my birth month.
Yeah.
My birth month.
Nice.
Hey.
Same, my eldest son as well. It was
Nice.
just January last week. Now it's August already.
Yeah. Time flies when you're
Crazy
having
stuff.
fun.
Oh, yeah.
Yep.
Oh, yeah. Oh, yeah. Cool,
Sure
cool.
does.
Yeah, so can I start maybe? I actually took a little trade. You guys will be proud of me on the pound US dollar. I don't trade Forex normally. I don't think I've traded
really?
Forex
Okay.
in about 3 years. So just closed it slightly before the session started. So maybe back end, if we can switch to my screen, we'll just quickly talk you through that trade.
Heck yeah. Come over to the dark side.
Robert saying he just wanted to say good night. Jeepers, Robert. Miss you guys. I'll leave the stream going. Listen to us in your sleep. Okay. Awesome. Good stuff. Thanks for that.
Have a good night, Robert. Yeah.
Cheers, Robert. Right. Let's just pull up my screen quick.
Get a roll.
And then see what's happening on the side. Then pass it over to you guys. Right, so there was a little trade on the pound US dollar. I went short. I identified what I think was an incomplete descending triangle. So there's a trade set up. Like I said, it just closed slightly before, reached target before the session started. A very small trade. I know that these patterns, if I'm correct about the pattern, they zigzag quite a lot. So just a nice little 2.2 or 2.5 or something like that to 1 risk reward ratio. So there we go. That's the trade there. So just in it and out of it. Reason why I took this trade was because of this pattern here. It is looking as if price is sort of moving lower in like this sort of wedge formation, right? And I was thinking around about this time that if this does hold true, that price would at least take out this low over here, or at least reach the low end of this blue channel, which did, and fortunately got out. The other thing, if I'm correct about this, and this is a descending triangle or maybe an incomplete one doing something like this, or just like, start moving up from here, then we might actually, if we do get a breakout above this upper channel line, potentially see a sharp movement back to the upside. Maybe sufficient enough to take a day trade. Right, so that was the trade setup. What got me into the trade was right before London Open, which is at 3 a.m. Central. Price basically pipped all of these highs. So probably can call this manipulation. immediately reversed to the downside. There was again a fair value gap as price pipped those previous highs, or these clusters of highs, and also reached this upper trend line, which I just drew from that high to that high, gave us this sort of like, I wouldn't say it's a doji, but what do you call it? It was like a little
Hammer,
inverted hammer type of formation.
or
Immediately reverses lower, breaks below the bullish fair value gap, similar to that gold setup yesterday, if you guys remember. And that becomes an inverted fair value gap. And as price basically pulled back into it, rejected it, got into the trade, and went well for a little while, pulled all the way back, tested again, and reached target shortly afterwards. So not too bad, not a biggest trade in the world, but it's all nice when you see these things. Like I said, I don't normally trade Forex pairs. I was all over it. I was actually playing around with the pound US dollar yesterday so that I can also, join the club. So I joined the club on a Friday. Let's see how the rest of the day actually works out.
I'm so proud of you.
Thank you, Tiger. Thank you.
And Michael, too. I speak for Michael.
You see all that crying on the psychologist bench did work. All right. Before I pass it to you guys, something else is interesting is here on FTSE. You remember when I said it's starting to look like this might have been a third wave in that sequence to the upside that ended on the 24th of July. Remember I said maybe this was it. I had to adjust my count. And then earlier this week, I was saying this is starting to look like where's my tools? You see, I've actually got my little toolbar sorted out.
Nice.
Thanks, Michael.
You're welcome.
Maybe I must just get my path tool out here. There we go. This might have been a third wave because what has price been doing? It's been fluctuating above and below previous swings. Just turns around. I think it was sort of here that I was saying if price takes out that high, this was yesterday, right? We start seeing a move lower, then this is starting to start really looking like an expanding triangle, meaning that we could potentially still be heading lower or getting very near to my proposed fourth wave. And this will be fitting as well, just considering the volatility, politics, tariffs, all that sort of stuff that's going on at the moment. And just to get the shape going here, an expanding triangle would look something like this, right? So instead of a symmetrical triangle, it starts off wide and moves into a narrow end. This actually expands. It's also called a megaphone pattern. What's also cool about this, if price does reach this cluster of median lines and lower channel line, this white one, that'll also be a really nice place to potentially go long. If I obviously get some sort of a bounce, maybe again inverse fair value patterns or break of structure, whatever, on the smaller time frame to trade this back upwards. That being said, it is Friday. Ideally, this would have been nice if this sets up on a Monday, for example, and then get into it. Who knows? Maybe price will just muck around, but these patterns are quite volatile, so it could still reach this lower end very, very quickly. Technically, it took out this low already here on the 28th of July, so it was Monday. So that could be the end of that pattern, but it just look nice if it actually gets into an area where there's a bit more of a cluster of market geometry lines or confluence, right, of different angles. And then swing this to the upside for that potential fifth wave. You guys probably remember me saying that these triangle formations typically form during the fourth wave corrections, and they quite often the penultimate corrective structure within a trending market, meaning that could then potentially complete this fifth wave. Yeah. So that is what I'm looking for in the FTSE.
FTSE.
Yeah, very interesting. I must still figure out why all of my bloody lines or my pitchforks moved here. But anyway, I'll sort that out. So yeah, I just want to give you a quick update. Took a little short in the pound US dollar. it does look like it could be also a ending diagonal that's taking shape there, although price is still moving strongly to the downside. Oh, this was me also mucking around the other day. Remember this little monster?
Oh, yeah. He's a cute little fella.
He's been popping up all over the show in different markets. So, let's see. If this isn't type of ending diagonal, let me just draw the shape again. And that might temporarily mean that this downwards move might end. Not like that a bearish move has ended, but that we might get, if price especially breaks this upper trend line, maybe a little bit of a higher retracement finally in the pound US dollar. But let's see. We also have NFP today. What else do we have on the economic calendar? Red folders.
Dollar PMI
just
for
keeping
the
an eye on
manufacturing.
PMI. That's right. Right, but that's at what, 8:30 Eastern. So what, 7:30, 15 minutes after we close our session. So if there are any setups that's going to take place, I would like to take it pretty early during our session. So yeah, guys, that's me. If one of you guys want to show your charts, what you are looking, then please take over.
Yeah, I got a couple quick things I can show real quick. You guys likewise would be proud of me because I once heard some wise words from somebody named Richard, somebody named Michael about marrying pairs. You guys know I've been flapping my lips all 3 weeks about the German DAX, right? Well, it did finally drop right into my zone. But what happened? It has currently just chewed right through it, right? So,
oh my, look at that.
Yeah, it dropped right into it. So I think that those new worldwide tariffs that are going on today probably freaking people out. So because I didn't marry this chart, because I just was flirting with it for 3.5 weeks, I cut my losses and move on. So I have avoided that.
Is that a gap lower?
Yeah, it gapped on the. Well, I mean, it's what it looks like on the trading view chart anyway. I'll look at the other chart in a minute, but yeah, it dropped right in, but then it just kept going. So it feels to me like everybody's just kind of having another, freak out day because of the worldwide tariffs going into effect today. Of course, some of them are being delayed, but the market sees that and they're like, sell, sell, sell. So yeah, that one kept me safe because I didn't get anything close to a trigger candle, as you can see. So it's officially went through the bottom of the daily and the 4-hour zone. So I'll reevaluate that here in a little bit. I wouldn't, at this point, if I were to even consider going long on the DAX, because it is still showing a bullish bias on my algorithm, then I'd probably be looking for something a little more extravagant than a 15-minute candle, maybe a 30-minute candle, maybe an hour candle even, a bullish candle, you know what I mean? So give me some volume back to the upside before I might even I might still entertain it. But I mean, if I'm just looking a little further down, I do have this
an interesting pattern on the top there. It looked like a descending triangle. But
yeah. Well, I do have this daily demand a little lower. It's been touched like soon after it formed. You can see that little candle right there wicked right in. But I'm sorry, that's the 4-hour. I thought I was on the daily. As far as the daily goes, heck, I don't know. I don't think we have anything. Yeah, not till we get all the way down to the bottom. But yeah, I'll probably just avoid the DAX now, since I didn't marry it. It was fun flirting with it while it lasted. But we're just gonna move on to bigger, better things, right?
Yeah, quite a big gap on mine as well.
Yeah. Moving on to my euro pound pair. Magnet's doing its job. It looks like it actually just touched my 1-to-1, didn't it? Yep. There we go. So guess what I get to do this morning? We're gonna do a little movie and lock in my cup of coffee. Oops, I went too high. Yeah, we're gonna go ahead and do that.
I think Coach Paul G was using that magnet during the future session.
I went to the wrong line. I went to the 1-to-1. I meant to go above where I bought. So So there we go. Worst case scenario, it looks like I got a couple cups of Starbucks coffee there on that one. Since we did hit the 1-to-1 level. Actually, I need to do that on my other chart real quick too. Get this one moved. All right, got that moved up on my other broker chart. It's $970 unrealized on that one at the moment, so I like that. Get back over here to my charts. What have I got new on my list today? Let me see here. NASDAQ still leading the way with an 11 score. S&P is right behind it with a 9. So we got a 9, we got an 11. And then U.S. oil still sitting there at a 7. So that's my 3 strongest bullish pairs at the moment, or bullish assets. My strongest currency pairs will be the U.S. dollar Japanese yen at a 6, dollar Canada dollar at a 6, and then, of course, this euro pound trade a 6 as well. So those are the strongest assets on the bullish side. Flipping the script to the bearish, same thing, pretty well the same story. It's all 6 British pound pairs down, anywhere from -8 to -12. So that's been consistent all week for the British pound. It's just sell, 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 right? So that's why I'm really enjoying my euro pound trade. Pound dollar leads the way at -12. Followed by the pound Jap -10, pound New Zealand, and pound Swiss all at -10. So the closest thing I have to the U.S. dollar would be the Aussie dollar sell at a -8, or the dollar Jap to buy at a 6, or dollar Canada at 6. So that's pretty well the same since yesterday as well. So I'm just going to ignore the pound pairs for now, and we'll just take a quick look at the dollar Japanese yen and the dollar Canada dollar.
Just quickly, Tiger, we got a question here from Czar Trader. Hola Prime TV, can you trade German DAX on this platform? You're seeing it there on TradingView. We're also using TradingView charts on the CFD platforms that we offer. And yes, you can trade it. It's just symboled GER40. So Hola Prime does offer it as a tradable instrument.
That's right.
The DAX 40.
That's it. Okay, good deal. So yeah, dollar, I guess I don't have an alert set for those, do I? Dollar, I don't see it anywhere. So it looks like I need to create a couple alerts. Dollar Japanese yen. Here we go. All right. Taking a look at the daily there. Yeah, I guess. Yeah, I don't really have a daily candle of note. So we'll step down to the 4-hour. Yeah, that's right. I do have an alert set. Well, how come I didn't see it over there? Let me pull up my alert real quick. August 8th. Okay. Must have just missed it. But yeah, I still got this. That's about a 50%, or maybe between the 50 and 61 Fib level. Got this demand zone here. I guess that would be, yeah, right at the top of the 61. So 61.8 would actually be my stop loss just below it. So I like that. I like that level right there. That'll be the 148.17 level. Look to get into that one. We'll have the 148 psychological level right in the center of that zone, so that'll act as its own little, potential support as well. And then the 61.8, and then we'll stick a stop loss below that. So we'll keep an eye on that. It's also below this little, I guess you could call this a little bit of temporary retail type, action if we're just looking over here. So this the demand zone's below that level, so I do like that. And then dollar Canada dollar. This one has just been a little more on the parabolic side since, comparing that to the dollar yen, right? So I had a clear pullback on the dollar yen, which gave me a really nice demand zone, but I don't really see that same price action on dollar CAD. It's just been parabolic, right? That more recent incline since July the 23rd. So yeah, about a week. So basically a week straight up on dollar Canada dollar. Pretty clear retail area though over here. So see what a daily looks like. Okay. So on a daily, I do have a nice little demand down here. I'll wrap a yellow rectangle around that. I'd rather not go that far though because I don't want to make a new low. So I don't know. It did break through this recent top, real nice strong candle through it, and I think I actually did. Yeah. So I made a 1 hour demand in this area. So that'd probably be the closest thing I'd be interested in. It's sitting right on top of that former resistance point back here. So I need to put me an alert right in here as more of a shorter term, more of a smaller time frame, type trade. So let's get an alert set on that. Yeah, I'll just throw it out a week. Why not? Get that alert set. Yeah, probably again, probably look at this as a shorter term deal, just since it is a little higher up on this most recent leg. More like a small term. So, all right, so that is the dollar, Canada dollar. Got my as far as indices go, yeah, they all pretty well tanked this morning, right?
Yep.
I mean, there's the S&P. It blew through that demand I had. NASI blew through that demand I had. So yeah, that trade, the trade tariffs going on today, probably, I don't know what you guys think, but it feels like it's got everybody a little bit afraid and just kind of doing some sell-offs, right? So,
yeah.
I mean, as far as like now, I do have this daily zone clear down here that I might be interested, or even this 4 hour down here. So that would be the
looks like Bloodbath Friday. Start the month.
Pretty much.
Yeah,
I mean, when it comes to strong declines like this, I don't know that I want to trust a 15-minute bullish candle, right? Make it a 30, make it an hour. I want to see an absolute strong reversal or bottoming action before I'd be interested in jumping into some of these trades. Oh, that was my euro pound alert. So yeah, I'm just going to keep it careful. I think Nikkei, it's showing a score of a 5. Yeah, I don't really have anything there. Obviously, the DAX has broken my heart. It's went for another man. So the silver, the poor man's gold, it's just getting smashed lately. But I don't have it on my screener at all. I think, guess what? So the FTSE, I just realized it is showing now on my screener as a bearish. -6. That's the first time I've seen the FTSE on there for a couple, 3 weeks. Yeah, that's brand new. So New Zealand dollar is a sell. I need to look at that one. So that one just popped up. We'll look at New Zealand dollar. Where you at? There you are. Yeah, I just broke through this demand, so it's showing some selling strength overall. I mean, I got a zone clear up here. Let's see here. Daily. Nothing really on the daily unless I go to the top. No real clear, good-looking zones there. Yeah, I kind of have this one here. It's a little close. It's a little low on the curve, though. So, yeah, I don't know. Yeah, if I were to look at that zone, probably just do like a smaller time frame, tight stop. I don't know. We might keep an eye on this one just to see what happens when it gets around that area. Get me a nice little alert set up in there real quick. I think that's really going to be my main ones at the moment. I'm already in the euro. Yeah, so Aussie dollar sell. That would be the only other one. Yeah, I got the same zone in this area as I do the New Zealand dollar. Because those ones are looking pretty similar. So if I could get both of those to jump in the supply zone. So for the New Zealand, if I could get it to bump into the supply about the same time the Aussie dollar bumps into supply, might be a little bit of a decent confluence. You got the two Australia area countries and currencies bouncing into zones at the same time. Might be interested in something like that. So we'll keep an eye on that one.
Mm-hmm.
New Zealand dollar index is about the same. You got a zone in about the same area. Australia dollar index, same thing. What's the Dixie looking like? Do have a little bit of a demand down in this area. So yeah, if I can get an alignment with the indexes, on bouncing into some of those same zones as I do the Australia, the New Zealand, I might be interested in taking one of those. As far as which one is the strongest, I got the New Zealand dollar as a -5, Aussie dollar as a -8. So I would probably be the most interested in that Aussie dollar, to be honest. The pound dollar is a -12. It is the strongest, but again, I'm already in a pound currency with the euro pound long, so would probably just avoid that one and look for the Aussie dollar. So I think that's going to be the number one on my list this morning as far as shorting that or buy the dollar Jap or the dollar CAD, whichever one reaches the zone. Ideally, if they can all hit the zone at the same time, hey, that'll add to the confidence level, right?
Yeah.
So,
Yeah, right.
I think that's pretty well it. Bitcoin, I noticed, is starting to. No, that's not Bitcoin. That's gold. Starting to break through that retail area. So, will we get a bounce off this previous, liquidity area? We'll find out. But it's actually getting close to my 2-hour demand. I noticed. But here's the thing: I think it actually fell off of my. Yeah, so it's actually officially fallen off of my top setups page. Bitcoin is down to, well, it's a 4, so it's close. And the last time I got into a Bitcoin trade, it was only a bullish score of a 3, so it was technically neutral. But yeah, I hit a zone I really liked. So yeah, sometimes I override the system, fellas. sometimes the gut just tells you to do something a little different. So yeah, I'm gonna keep an eye on Bitcoin once it hits that 2-hour demand over there, and then the Aussie dollar and all these indexes that are related to that, the New Zealand dollar. If I can get any type of confluence zone bounces, then yeah, I might actually have me a trade this morning to add to my euro pound.
Cool.
Nice.
I think that's where I sit at the moment. If you guys have anything else you want to see, oh yeah, last thing, oil. So I can't remember. I know I went over this with Paul last night on our Quiet Markets channel or stream, but it is still giving me a score of a 7 for oil. And this is giving me the exact same price action as the Nikkei did the other day on that trade I missed. So let me go remind everybody what the Nikkei did. So here's the Nikkei. This is the one that did bounce when I was asleep. But looking at that one on a 1 hour, I had this contraction box here. We had manipulation up, down, further down. And on that one, it did jump into my 10-minute demand zone. And as you can see, it just had a nice, 4-to-1, 5-to-1 move up. So that one hit when I was, in the middle of my night, about 2 o'clock Central, when I was sleeping. And I missed that trade. Okay, no big deal. But now I go to the oil, and it's setting up the same way, same exact pattern, guys. So contraction, manipulation up, down, further down this time would be collecting this liquidity plus the unfilled orders and that demand on a 30-minute zone, or it's basically a 1 hour, 30-minute. But hopefully I can get this one without missing it while I'm sleeping. But I'd love to see prices drop in for U.S. oil and see if I can redeem myself from missing the Nikkei trade the other day on a very similar pattern. So
it happens.
But yeah, that one might be a little farther away.
All the time.
Yeah.
Mm-hmm.
Yeah. You and I complained, Michael, about missing these European Open trades. And then we come to the European session, some New York session trades. Like,
Yep.
Funny stuff. But yeah, that's pretty well where I sit at the moment, fellas. Michael, if you got anything, we'll see what you got bubbling up.
Yeah. Not too much. I'll be honest. Yesterday, I kind of stepped away. It wasn't too much going on for me. So I was a little cautious. Didn't really see anything pan out. I've seen a few possibles, of course. But as I always mention, that Thursday before NFP, I tend to just wait a little bit for some extra confirmation because, I've been one of my highest losing days. Not just losing days, but most consistent losing days is the Thursday before NFP.
Yeah.
Okay.
So I don't go too hard on those days. But yeah, we can get my screen up here. Great. One moment here.
Sounds good. Yep. I'm just going to be playing around in the
screen
world.
Yeah, index. Probably just be taking some ganders. Not too sure how active I'll be, to be honest. Especially today. I think I might just back and let next week roll around. Yeah. Yesterday was that last day of the month and the day before NFP. Yes. Prime losing days to me.
So today's all about setting up your Monday setup.
Yeah. Exactly.
Jeez, and the pound US dollar is also getting hit hard.
Yeah, it is. It is. Yeah, I mean, I'm still not interested in pound dollar unless we get all the way up here, 132.85 level. Personally.
Hey, Christopher Doyley. How's it going? Thanks for joining.
Hello, morning.
Third Red. Good morning. Good morning. Happy Friday.
Yep. TGIF.
And Chris Byrne. Good morning. Yeah, if we can just switch to Michael's screen, please.
Hop on to Michael.
It's a quick reminder, we got news coming up about 12 minutes as well.
Oh.
Okay, perfect.
Prompted and ready.
There we go.
All right, awesome. Cool. So kind of how we were mentioning Tiger about shorting the pound. I did just see GN that I was maybe a little interested in, just maybe. All right, just maybe. We'll see how it all stands. Reason being, obviously, here we have this 5,200 cross, so we know we are in level 2. Looking for that pattern off the 200 here. And then we have this coming up next, which is kind of got this little 3-hit move, but this one is not really much because it didn't actually touch the 200, although we have outside the band. So chart says yes, TDI says no, that's not it.
No.
We have the real hit, right, above the 200. Chart says yes, TDI says yes, that is outside structure, right? And then we have this outside the band again, outside the band. So this would need to make one more pass for me, right? Something like this, and then go in addition to us having inside the band, because we already have the reload, right? The reload's already here. Market baseline did go above the static, so that's the only thing this one is really missing. Let me copy that. I'll need that for later. Yeah, that's the only thing this one is really missing. So maybe we can kind of see what this will look like a little bit later. Yeah, nice one for nearly 1.25. That's pretty good. So not sure, but I will leave this alert. We'll add an alert here just to see. All right, what we got going on there. So yeah, maybe not. We'll kind of see what this one ends up looking like a little bit later today, because there's still a few things that needs to happen for me to be really interested in it. And then next was AJ. AJ wasn't too bad. Oh, you know what? I forgot. It did slip up. So yeah, we had a lot of weird stuff yesterday, I'd say. This is exactly why I tend to just stay away from these, because yesterday when I saw this was looking good for the shorts.
Mm-hmm.
right? I was looking for some type of M pattern here to go short
Mm-hmm.
back to this 800. We got outside the band, outside the band. This is inside the band. We have the reload. Everything about this was nice yesterday. But what I don't like now is boom. Now we have this 5200 cross to the upside.
No,
That part I don't like. That I
don't
don't
like
like.
that. Nope.
Nope, nope, nope. We got the cross down and the cross back up. This is starting to look more long than short. Right? Like maybe a move. We got the 5200 cross, so maybe a move off the 200 going back to the upside at this point. Market baseline need to go back below the static for that reload. So maybe a little confusing. I don't know. We'd have to see. And then I know for a fact too, we got the news coming up shortly, but NFP is going to end up coming and either mess everything up or make it to the point where it ran during you couldn't jump. So
Yep. Oh, it'll mess some people up, I'm sure.
Absolutely.
yeah, especially the gamblers.
Yep. The slot machine players. Yep.
Yes. But yeah, other than that, that was really it, guys. I wasn't seeing too much at all. Like I said, I kind of was really cautious yesterday.
Yep.
I want to say for the past 2 months, I think I had a month break, but the past 2 months, month break, and then man, I want to say 3 months. I had to look. I don't have to look again. But in short, that Thursday NFP, like I'm either scratching out with a small loss, getting taken out at break even, or I'm actually just losing it altogether. So on my top like losing days, it's always that day, which was yesterday,
Yeah.
Okay.
right? So for
Well,
me,
that's good to
again,
know.
I tend to just it's excellent to know this thanks to
Excellent to
journaling.
know. So you know when you can just take a day off, right?
Yeah. And that's pretty much what
Maybe
I did.
just
I mean, obviously, yesterday I was looking for a pristine setup, right? Like Wednesday, we had all the news, and I knew yesterday was, again, the last day of the month. So a lot of
Mhm.
positions exchange. And then lastly, again, we had that day before NFP. So we really had, to me, from my take, it was 2 days to kind of be, 2 reasons, I'm sorry, to be extra cautious. Last day of the month and one day before NFP. Um, And obviously, the main one would be the fact that I always lose on that day.
Yeah.
So I just being very, very, very cautious yesterday. So not too much on
Can't
the
blame.
action side yesterday. Probably won't be too much today either. I'll look through the charts here in a moment a little bit deeper and kind of see if I like anything. And
Yep.
yeah, of course, go through all the charts how I normally do.
Yeah.
Yeah.
We got a comment there from
Yeah,
Chris.
what else supposed to be, guys?
Says hearing that we're not really keen on trading today. Well, if something nice sets up, I will trade. I've took a little trade already this
Yeah. I
morning.
got a few ideas myself.
So it's not like we're not keen. We just, I reckon, cautious. And it's also about
Yeah.
knowing yourself, right? Like Michael was saying, uh, he generally does not like trading the day before NFP or on NFP days. So, you know,
Right.
if you continuously take
Now, I
losses,
will tell
then
you,
just don't trade.
yeah, I will tell you if I can get so eight NFP is at 8:30. So if I can get 8:30 news to happen, and then it do whatever it does, right? Like it's already
Mm,
accumulated
yeah.
manipulation around 8:30, and then confirm, excuse me, at 9 Eastern, that 4 o'clock, that 4 hour candle at 9, and that sets up
Yeah.
exactly at that time. I'm all over that
Oh,
trade.
yeah. Oh, for
Yeah.
sure.
Yeah.
So
Oh,
I
yeah.
won't say I just
I
totally
mean, a
stepped
lot of
away.
these markets will be waiting anticipation for the news, right? We're quite erratic.
Yep,
We see that quite often. And
yep.
then, boom, you either get manipulation during that news release as well. But generally,
Mm.
yeah, around about 9:30 when the New York session starts, that's when things really get moving. and hopefully some sort of directional move or trending environment.
Yeah, exactly. I've got some setups. I'm ready to roll, but yeah, just be careful that little bit of window before or after news. Once I see the
Tiger,
volume,
you're always ready to roll. What's new?
well, I'm just saying, yeah. I'm going to be pausing and pumping the brakes at that time, but yeah, as soon as I see the volume come back down to halfway normal, hopefully we get a little bit of a trend phase coming out of that. Then yeah, that's where I'll be a little more interested in jumping in for sure. Just a little caution during that time is all.
Yep.
No, I hear you.
That is true.
Yeah. We'll definitely go through the charts here in a bit. Maybe after the news session here. Like
how are we doing on time? Still got 4 minutes.
Yep.
Before
I might even go through some of the majors later, just show some technical setups, even though they're more neutral, I'll at least go through some technical setups from some higher level or some higher time frame supply and demand, methods, just to give everybody an idea of that. I thought about that. I'm like, I'm typically only going through analysis of the ones that are showing up on my list, but I could probably start going through just like the majors as far as the technical setups, and then obviously just caveat that with people that this is a great technical setup. However, I personally, obviously, am waiting for my bullish or bearish bias. But a lot of people on here are probably more strictly technical, and that's fine. So, I'll probably at least show those technical setups from the higher time frames more often.
Nice. Okay.
If that makes sense.
That makes sense.
Yeah,
for sure.
It does. All right. Yeah, Michael, just maybe go through what you look at there. I mean, we've done this quite a few times, but I do see a few new traders here or new names.
We got some new ones,
a couple of minutes,
new blood.
and then we'll kick off the news quickly.
Yeah. So let me just go through. I guess I'll look through something else here, and then we'll because you guys know I'll dig deep into this. I don't want to get started in 2 minutes, guys. I
like it.
Cool. So let's see.
New news.
We just got news, guys. Sorry, Michael. We'll do the news in about 15 minutes time. All right, so 15:15.
Oh, 15 minutes. Okay.
So the floor is yours. Go ahead, sir.
Oh, gosh. Okay. Sweet. Well, since we got new people here today, I will go through. This is already. Luckily, I kept this on here, right? Because I normally just have to draw this again every day, right? So, in essence, guys, I am what we would call a market maker, structure trader, right? So, I'm trading the market cycle. Obviously, you guys probably have heard of AMD, accumulation, manipulation, distribution. I'm basically trading a version of that. What I would call also market maker cycle, right? So this is what the cycle will look like on not a perfect day, but in general, it tends to trade in this direction or in this style with the peak high or the peak low. That's why I have both of them here, right? So it really matters which direction it's going in. But you want to first identify where exactly you are in this entire thing, right? Because you're going to be somewhere in here. All charts, no matter what, you're going to be somewhere in here. And the trick is to determine exactly where that is, right? Whether you're in peak high and you're looking for, this is a continuous thing. But whether you're in peak, let's say peak low, and you're trying to trade away from the peak low for those few days. And also, guys, this is, I don't know if I really mentioned this before, but this is a great way that swing traders, if they can catch this, instead of me just closing here, well, grabbing a trade here and, maybe taking it off here in the same day for an intraday trader. Some of these guys who swing catch this move, and they hold through this next swing back down or even add on to the position and able to take it all the way to the peak highs. Yep.
Mm.
So that's more of a swing trader style. But no matter what, you want to be able to identify these key levels, and I call them in level 1 and then level 2. Right. I stay away from this peak low. Reason being, this thing could just continue to chop. Right. You never know how long that is. Right. So I stay away from that peak low here on either side, in addition to the high, right? Like I don't want to trade the peaks at all. It's way too unpredictable. Um, Again, you cannot really ever tell when exactly it's going to happen, when it's going to turn around. And for me, it's just not right. You kind of want to. It's hard to time that, right? And by the time you catch one or good two timings, you've lost on so many of them that you're basically just getting your money back, maybe a little bit more.
Yeah.
So like a true definition that the trend has changed, right? Like we've peaked out or at the high or at the low, and we're turning around, right? So for me, that is once we get this M structure, no matter what it looks like, M or W structure, I want it to break that level, right? Like break this level that you can kind of see here, and then retest. So it'll back and simultaneously it'll retest this exact area, right? Kind of what we would have here, as I'm mentioning. Right. So a good example here would be Euro NZD that was taken on Monday. Right. We had this level 2, as mentioned, which would be this 5,200 cross. Right. And price came back to this exact area. Right. For the break and retest. We had this huge M structure. Right. And in essence, price. Now, this is not going to be exact because, again, if it was exact, everybody would see this. But in essence, you want somewhere around this same exact level, right? This is where it kind of bounced off of. So you want to get somewhere in that same area, right? In this example, this one is a little bit off, but you kind of got to be smarter than just the exact level, right? It's more of an area than a level, anyway. So I can kind of do something like this instead. Yeah, a zone. There we go. All right, maybe something like this. Right. All of this is area.
Chris is asking, do you confirm on the 1 hour time frame as your basis for your trade, or use multiple time frames to confirm?
That's a great question. So I am looking at everything on the 1 hour chart. Right. I got 4 setups. 4 of them occur on the 1 hour chart. And I'm looking for a close below the 13, right? So in this particular example, if I would have taken this on the 1 hour chart purely, I would have took the trade here. However, I am looking also for 4 hour confirmation. So with that being said, if I'm looking at the 1 hour to actually enter the trade, or I'm making my analysis off of it, I would always kick it up one level. So I would go to the 4 hour chart in this example. Now, it's kind of hard to tell this on the hard right edge, but before I took this trade, right before this candle actually closed, price was all the way up here. Well, I'm sorry, the previous candle was all the way up here, which is above this red EMA, right? So when it's like that, and it's still an open candle, even though this is below it, the candle's open, I need it to close, right? So actually, I wasn't able to get in exactly at that level that I really wanted to, right? Reason being is, once again, the previous candle is still above the 13. So I actually couldn't get in until the next candle, once price actually closed, right? And then I was able to jump in here, right? Stop swing. TP was down here towards the 800 EMA. So yeah, to answer your question, I am looking at multiple time frames, the 1 hour mainly, and the 4 hour for higher time frame confirmation. It does how pretty the setup looks for me. If it does not confirm on the 4 hour chart, I have to wait. Because what tends to happen is this candle would have pulled all the way back up, closed above, and then ran the other way. And that's because there's no higher time frame confirmation. Um, I know some traders do the top-down approach, where they'll look at the weekly, then the daily, then the 4 hour, if and continue down if anything. Great approach. I typically don't go that high. Since I'm an intraday trader, I need to be a little bit closer to the action. So 4 hour, 1 hour is pretty much good for me. Now we'll scroll down sometimes to the finish just so I can see some type of pattern there that I actually like as well, right? And sometimes, depending on the timing and how the candles close, I can get a better entry. The problem is sometimes if I'm looking at the 15-minute chart with the same ideology, if I kick it up to the 1 hour, which is the higher, the one time frame higher, I will need price to still be on the same side of the 13 EM, which sometimes it's not. So I don't like to take too many 15-minute trades without the 1 hour confirmation. Now what'll happen is sometimes it'll be below on the 4 hour chart, not on the 1, but on the 15. And in those scenarios, you kind of got to just tread lightly. I typically just wouldn't put my full position on in that scenario until I get that 1 hour close as well. So I would need the 15, the 1, and the 4 hour all closed, let's say for shorts below the 13 EMA for that full confirmation. Hopefully that wasn't too confusing.
Not at all.
All good.
So yeah, I try to get as many confirmations as I can here. But yeah, in essence, just coming back to it, I'm mainly trading this cycle here, right? And I'm just identify exactly where I am and trade away from that level, right? So in this level 1, I'm looking for some type of bounce off this 50 EMA when I get back to this area to retest it. So whether that's just some bounce or some M structure off the 50 EMA, just trying to short that into the next level, which will be, level 2. And then in level 2, I'm waiting for that same pullback, right? Except in this level, it will be towards the 200 EMA. And it typically gives me some type of pattern, whether it is half a bat, a head and shoulders, or just a regular M. A good example of that would be USD CAD. I want to say this was last week or 2 weeks ago. One of the two. Let's check it out. Where is it? Here it is. Here. Right. So,
Half the bat.
Half a bat.
Yeah, half a bat. So here we are here. This is a great example. So you can see once this 5,200 crosses, as I always mention, we are in level 2. Right, so 5,200 cross, we're in level 2. And then I'm looking for some type of M. I'll just put HB for half a bat, then I'll just put H and S for head and shoulders off the 200. All right, this is pretty much what I'm looking for every single time I come to the chart, no matter what. All right, so as soon as that cross, I'm just looking for price. The very first time price touches this 200, right? And as you can see, that's happening right around here, and we have this head and shoulders pattern, right? Which looks like something like this. We got left shoulder, head, and then this right shoulder. As soon as this right shoulder closes below this area, it's good to go. Stop to go above here. You can target pretty much wherever you want to. One of these two spots generally. And as well as if you look at this too. All right, that will be the entry signal right before you enter though, of course. You will want to kick it up 1. Right, and make sure that price is in fact above the 13 EMA.
Mhm.
I'm sorry, in this case, it would be below the EMA, right? Which it is. If you can look at this candle here, you can see it's a closed candle below this red 13 EMA. And I'm not saying that's why it dropped, but the probability of it dropping is pretty freaking high, right? And this is the exact type of move that I mentioned when I say I just want to capitalize off these. These, that's it, that's all, that's it. I don't really care about anything else. One of these things could fly to the moon, and if it wasn't my setup, it wasn't my setup. That's just that.
Fair enough.
Yeah, I try my best not to miss any of these because, man, oh man, bread and butter, right? My level one trades that bounce off of after the 1350 cross that run up. These are my number one setups. Number one, they are my Mona Lisas. Is what they're called. Like absolute gorgeous textbook trades, pan out pretty frequently. All right, now they show up a little bit less than my level two trades, which is that pattern off the 200. These show up pretty often. Who's here in a bit? I'm going to go through all the pairs. You guys will notice how many level two trades we have that we're looking for either M's or W's off the 200 EMA. We'll show all of those pretty shortly after the news, but yeah, those are my only two plays really zones that I'm really looking at every day. As I mentioned, I have about 5 setups, but they all occur in those 2 levels, all of them.
Michael, I have a poster on my wall of accumulation and distribution, and it kind of breaks down the different structures of it, the different phases, the markup, accumulation, markup, distribution, and obviously the decline. I have that same poster as a visual. So after I do the news here in a little while, I can actually pull that up and we can share with the chat kind of how the market structure looks, kind of like exactly what you're explaining. Yeah. But I found a really awesome visual that I think would be good to share. And there's a link I can even put in the chat as well for people to just study it on their own time. And I think it'll really emphasize what you just explained. So the way you and I both trade, actually, using accumulation distribution. So I think that'll be fun. Yeah. That'll be a fun little visual for everybody to share. I was just making sure it didn't have any, any issues with it, but it's good to go. So
right. Awesome.
Okay. Tiger, we're gonna do the news now as well.
Yeah, sounds good to me.
So maybe after that we can just share that. Yeah. So to all our viewers, guys, we're just gonna do a quick news segment brought to you by Coach Tiger. Then we'll be back to the charts and continue probably more of an educational session than anything else today. I'm potentially looking at a gold trade as well, but we'll talk about all of that after news coming up in just a second.
Awesome.
Great. What's going on, everybody? Happy Friday. TGIF, we have made it another week. Markets are on high alert as we head into this NFP Friday. The dollar has been absolutely relentless this week, and today's jobs report could either fuel its rally or finally trigger a pullback. Let's break down what's moving the markets and how to trade it. The dollar is flexing its muscles this Friday as traders brace for the ultimate jobs report showdown. Yesterday's Fed decision set the stage. Rates held steady, but the real drama came from the dissenting votes. The 2 Fed officials, Waller and Bowman, of course, broke ranks and pushed for a cut. They didn't get their way, though. Jerome Powell has the final say, as always, but it did signal cracks in the hawkish armor. So Powell, he wasn't having it. He did double down, kept rates unchanged. This, of course, was on Wednesday. and warning that inflation still isn't tamed. The market's reaction, a sharp drop in September rate cut odds, plunging from nearly 60% to just 43%. So that sent the dollar surging, and it hasn't really looked back since. Meanwhile, the U.S. economy delivered a stunner. Q2 GDP roared to a 3% growth rate, smashing expectations and leaving that Q1 contraction in the dust. But not all the data was dollar friendly. We did have the job openings took a dip, with the jolt slipping to 7.43 million, while private payrolls from ADP showed a modest rebound to 104,000 jobs. Mixed signals, you bet. That just sets up today's main event to be more dramatic. So let's talk tariffs. So because Trump wasn't holding back, a fresh 50% levy on Brazilian goods was set. A whopping 39% on Swiss imports, and then a bump to 35% for Canada. The Swiss franc took a hit, sending USD CHF climbing, while USD CAD held steady despite the new trade tensions. Safe havens like gold wobbled near $3,300 per troy ounce, and oil slipped as demand fears crept in. Now let's get to the big question. What does today's NFP mean for your trades? Well, all eyes are locked on the July jobs report, dropping at, I believe it was 7:30 Central Time. And this one's got fireworks potential. Forecasts are calling for 110,000 new jobs, down from last month's 147,000 number, while the unemployment rate is expected to tick up to 4.2%. Wage growth could be the real story. If it comes in hot at 0.3% month over month and 3.8% year over year, then that could reinforce the Fed's wait and see stance and keep the dollar charging even higher. For the euro US dollar, the 1.14 level is the line in the sand. A strong NFP could send it crashing towards 1.134, while a miss might spark a rebound towards 1.147. Over in the US dollar JPY pair, we've already blasted past the psychological 150 level, and Japanese officials are getting nervous, warning about speculative moves. And let's not forget the Aussie and the Kiwi. Both of those are under pressure as well after China's weak PMI data added to the risk-off mood. But the jobs report isn't the only game in town today. The Eurozone inflation data could shake the euro, especially if it hints at more ECB hesitation. The pound's already broken below that 1.32 level, and UK housing data might add to the pain. And oil traders are watching closely. WTI is hovering near the 68.75 level, but another wave of dollar strength could push it even lower. So here's the bottom line, traders. Today's NFP could be the spark that either extend the dollar's rally upward or finally trigger a reversal. So we'll just have to wait and see. Either way, we are in for volatility. So as always, be careful. Stick with Forex Fire. After the numbers drop, we'll break down the charts, the levels, and the next big moves live. So trade smart, manage your risk. Let's catch fire in the markets together. And then the last thing I'm just going to go over real quick is the timings for the reports. We have already had the Euro CPI numbers come out. Looks like they did meet expectations on the flash estimate year over year at 2.3. And then we also had the CPI flash estimate year over year number actually beat expectations. So they had that one forecasted at 1.9, but it did come in 0.1 higher at a 2%. So I'm happy because that helps my euro pound trade, long trade I've got going on. But yeah, as far as the USD employment numbers, that all comes out at 7:30 a.m. Central Standard Time. And then we do have at 9 a.m. Central Time, the manufacturing PMI numbers. So be careful in and around those areas. Let the volatility shake things out. When it comes back down to normal levels of volume, then you might consider looking for a trend phase at that point. So with that, that's all I've got for today. Be safe, and we'll get back to the show and look at some more charts. Back to you guys.
All righty, back again. Thanks, Tiger.
Buck.
Thank you. Thank you.
Welcome.
Right, where were we? You wanted to show us something, Tiger?
Yeah, I'd be happy to.
I can't remember what, but you wanted to show us something.
The market
Yeah,
maker.
Yeah, I wanted to kind of go through this accumulation distribution model for everybody just so they had a visual. So this is the poster I have on my wall. It's right behind my laptop. And it basically just kind of reiterates what Michael was talking about and what I love to follow as well. If you can imagine this price action, just look at it like a daily time frame. It's real simple. When we're talking stage one, the accumulation stage, this occurs after a drop in price. So imagine further back in time, this being a downtrend, right? As it says there, it occurs after a drop in price. This is the process of buyers gaining control from sellers, which leads to the markup phase. So when you start seeing all these little valleys down here, this is where the big banks like to start accumulating their position, hence the term accumulation. So accumulate, right? Because they are waiting for this move right here. All right. And then once we get to stage two, which of course is the markup, or I call it the trend phase, that's where the bullish phase, it says of a stock's life, but just pretend Forex, crypto, whatever you trade, stocks is just generalizing for everything. So the bullish phase of a stock's life is defined by those higher highs and higher lows. This, of course, is where you want to get long on breakouts and after short-term pullbacks. Rallies are innocent until proven guilty. Okay, so one thing I'll say about this is obviously the goal is to identify the accumulation and then identify when that trend phase starts, because the lower on this scale that you buy, the higher the probability. This is called, this is low on the curve, right? The higher it goes, yes, we are in that trend up phase, but the higher you go, the less probable those zones work, because the end is coming, right? the end is near. So the goal is to really get into, right? The goal is to get into this trend, on the bottom part of this. So that's just something to keep in mind. So that's the markup phase, or the trend up phase. Now we move on to stage three, the distribution phase. So this occurs after a prolonged price advance, process of sellers gaining control of prices, which leads to the decline. So yeah, the top part of this markup / the early part of the distribution, this is where the big banks are selling their positions for profits, right? Accumulate down here, distribute up here for profits. When they do that, the process just repeats. Okay, it repeats. We go, but only now they're doing it on the decline, which is stage 4, and this is the downtrend. Bearish phase of a stock's life. This is where you want to be short. Look to sell short fresh breakouts after short-term rallies have exhausted themselves. Rally attempts are guilty until proven innocent. Okay, so the markup is innocent till proven guilty. The decline is guilty until proven innocent. And then the process just repeats. It just does it on the opposite way. So I just thought that would be a cool little graphic to share with everybody. I've got a link, and I'll actually just throw it in the chat, the YouTube chat for you guys. That way you can go read all this, all the details further down here at the bottom. I'll save that for you guys to do you some homework. But yeah, that's it. That's the market maker cycle. Exactly what we preach.
Nice.
So yeah, just thought I would share that with everybody.
Awesome.
Thanks, Tiger.
Yeah, so I will get that copied and pasted into the chat for everybody to check out.
We could get my screen pulled up. I kind of want to just elaborate on that even further.
Yeah. Let's do it. Let's do it.
Okay, so yeah. All right, let me get my screen pulled up and show you guys. Just elaborating further on that picture. We're kind of piggybacking off of the same here. All right, so this tends to happen every day, like no matter what is going on, right? And I'm just going to draw a visual here of what that will look like as well, and try to just add a little bit more context to it too. So typically every day we have these two things, right? So within here we have excuse me, the Asian range is what it's called, right? And within this Asian range, you just have price trading in its exact time frame. I mean, in its exact zone, right? So I'm just going to put some times on here too, right? So this is 5 p.m. right here at the start of this line. And then at the start of this line here is 12 a.m., right? So typically how it goes is from 5 p.m. to 12 a.m., the market is just in accumulation, right? All right. How can I draw this on here next? Hang on a second. Let me figure out how to. Let me see. All right, and then from here, oops. Yeah, then from here, we'll make this a little smaller. Yeah, let me make this a little smaller. Large. All right, cool. All right, and then from here, right, let's say we want to go short, right? So what typically happened was before this too is probably had some moves like this, right? So, so if you look to the left, price was higher, right? So then we'll come out of the box and something will happen like this. You'll start making wider ranges. You get something like this. It'll look just like this, right? And let's do this here. I'll keep it here. All right. Now this part of the cycle, and this happens every day, whether it's on, I don't know, this happens on any time frame, the daily, weekly, monthly, yearly, whatever. 15-minute, 5-minute, it looks something just like this. Now, obviously not exactly, but it's going to look, a variation would look something like this, right? So as soon as that is box, when I say the box, I mean, this is typically a box or a rectangle, whatever you want to call it, from 5 to 12. Now, this is the Asia high, obviously, and this is the Asia low, right? So what they want to do is as soon as they come out of it, they hit this going high, right? Everyone jumps on this trade, especially the breakout traders, that this is going long, right? And then they just kind of mess around with this level. They might do a little pullback, hit the Asia high again. And this is where a lot of breakout traders get on here, kind of pull back, maybe stop them out, who knows. But the break and retest people, this is why they have so much success, because they at least, whether they was wrong or right on the direction, if they were a scalper, doing a break and retest, they would catch this move, right? They would catch this move. They want to put it higher, right? So we got that, and then so we got these two moves that happen here. Typically, it'll come out, it'll hit the first one, right? Because this is the breakout, and then it comes back, and it goes about halfway through the Asian box, right? And then it kind of runs back up, makes these people, it was like, oh no, it was long. Let's jump back on. They get back in the position, right? and this is a whole mental game that goes on right here, like pure structure. And then what do they do on the second move? Again, this is where they hit the Asia high. So this retest the Asia high, it is. So this third move, they'll come up, and this pattern tends to come and retest on over here. So maybe they piled on again and went long, right? So there's traders who definitely went long right here. So they're really tagging them long and short, stopping people out, activating orders. This is that manipulation phase, 100%, right? Because you can always tell the manipulation is happening when there's no real order or what it looks like. There's no structure, and it's hard to grasp because they're going long or short. Right? It's really hard to grasp what direction this thing is going in. Right? So, and this is why I always, when I talk about the M or that W, this is it. Right? So what happens next is this thing comes on down. Right? Then it retests this area, this same area, right? And then this thing finally starts to make that deep move. Right? And of course, this is the distribution phase.
It's all about the pullback.
Yep. Right? Especially you want it to be right here. You want it to be right there. This right here is the sweet spot. Right here. In this entire manipulation phase.
That's it.
Right? And you want to be able to catch this exact process. This happens every day, whether it's long, whether